China will strengthen Hong Kong's position as a RMB trading center and diversify its foreign exchange reserves in 2022. China will push for greater international use of the yuan by giving more support to Hong Kong as an offshore trading center next year, while also diversifying its forex reserves, the People's Bank of China has said. Efforts to support the city as a yuan hub were among the central bank's 2022 priorities, outlined at its annual work conference, and marked a change in tone from the steady and prudent economic message in the country's 5-year plan. The announcement on Monday comes as Beijing looks for ways to manage possible spillover from an imminent rate hike by the U.S. Federal Reserve and promote investment across Belt and Road Initiative countries, while strengthen the support for the construction of Hong Kong as an offshore yuan hub, and promote the healthy development of offshore centers, the PBOC said in an online statement. Hong Kong is China's vital link to the world, financial regulators say. Hong Kong, which had end October deposits of 834.9 billion yuan and accounted for 46% of China's cross-border payments last year, is a key international financial center for Beijing, though it will be integrated more tightly with mainland cities under the Greater Bay Area Plan, which includes Guangdong Province and Macau. Hong Kong close economic connection with the mainland, including its stock, bond, and wealth management connect programs, give it an edge over other offshore yuan centers like Singapore and London. The central bank did not elaborate on what policy support the special administrative region would receive, but there is huge potential for the issuance of yuan-denominated financial products, trade settlement, and use of the digital yuan. Zhou Xiaochuan, former central bank governor who masterminded the yuan's international use, said over the weekend that China should reconsider establishment of an international board in Shanghai, which is positioned to be a global yuan asset center. Many companies in Belt and Road countries have difficulty in equity or bond financing, Zhou said at the Shanghai International Financial Center Development Forum on Saturday. China should start from this and allow qualified foreign companies to raise funds from the Chinese stock market. That, however, will require a higher level of capital account convertibility to facilitate massive inflows and outflows, he said. The Ministry of Finance issued 20 billion yuan of bonds in 3 tranches in Hong Kong this year, while the PBOC sold 5 billion yuan of central bank bills to international investors last week. U.S. coronavirus stimulus reignites Beijing's criticism of dollar hegemony. Beijing kicked off its yuan internationalization plan in 2009 with hopes of breaking U.S. dollar hegemony, but the goal has gained more importance since 2018 amid fears Washington may tighten access to the U.S.-dominated financial system. International use of the yuan is making slow progress, but it remains far behind the US dollar in terms of international payments, reserve currency, and forex transaction. The yuan accounted for 2.14% of global payments in November, 5th overall, compared with 40.39% for the US dollar and 33.52% for the euro, according to SWIFT. At the annual conference, the central bank also outlined plans for more diversified investment in its $3.2 trillion foreign exchange reserves, most of which are in US dollar assets, including $1.06 trillion of U.S. Treasury bills. The PBOC vowed to increase the elasticity of yuan exchange rate to absorb potential external shocks, while pledging more financial opening and basic stability of the Chinese currency. The world's second-largest economy will continue to advance its pilot program for the digital yuan, which it hopes will boost overseas use of the currency. The PBOC has teamed up with the Hong Kong Monetary Authority, as well as its counterparts in Thailand and the United Arab Emirates, to study cross-border payments of digital currency. In a separate meeting held Monday, the State Administration of Foreign Exchange, China's currency regulator, said it will continue opening the capital account in a steady and orderly manner. Multinational companies will be able to enlarge their yuan holdings for easier exchanges, while Beijing will consider a trial program to let private equity funds invest overseas. However, the regulator said it was still on high alert for external shock. While enhanced monitoring and macroprudential management of forex markets, it said particular attention will be given to small and medium-sized exporters, which need to be guided in managing exchange rate risk.